Hey everyone, welcome back to the tax show for people who owe. Actually, the tax game show for people who owe. Phil, we got a game show today. Did you know that?
No, that's awesome.
Surprise, surprise. We're going to try to stump Phil by asking him or presenting two specific scenarios and trying to pin him down as to what's best.
Oh,
Right?
you know what I'm going to say, Dave.
It does not depend.
But it does.
Well, I'm sure it does. Let's start with a couple of these scenarios. I'm going to name them off and you get
Okay.
to decide which is best for taxpayers who owe. Ready?
Ready.
Phil, question. What's better? Pay in full or a payment plan?
Can I say the words?
Nope. Cover them both.
All right. Paying in full is great. It does mitigate penalties and interest. And again, that penalty that you're going to accrue by delaying payment or entering into a payment plan is going to be the failure to pay penalty. That's going to accrue at 0.5% of your unpaid liability until it hits 25%. But the kicker is interest, and interest compounds daily. So
Wow.
if you can pay in full, it's great to pay in full. But as you know, Dave, many people can't.
Well, especially not the people who hire us, more than likely.
Exactly. They usually call because they feel like they're without options.
So you covered interest. Are we paying interest on interest with the IRS?
That's what compounding does. It takes whatever is added and adds it to the principal balance.
So that can grow very quickly then. And that's what we see.
Indeed.
Okay, so pay in full if you can, and payment plan if you can. But pay something, I guess.
Yeah, and do something more importantly.
Well, that's for later. But anyway, next one, here we go. Short-term payment plan or long-term payment plan. What's the difference and why should I choose one or the other? Not it depends. Cover both.
We'll cover both. Short-term payment plan, usually within 6 months, you're asking the
90
IRS, hey,
days.
I just need a few more days, maybe a month. But the great thing about these short-term payment plans is that that zero setup fee. If you didn't know whether it's a 6-month arrangement for these longer-term payment plans or even a monthly repayment plan, there's user and setup fees that do get passed on to you as taxpayers who owe.
Good point. So you are saving some setup fees by choosing the short-term payment plan.
Right, usually within 6 months.
What about interest?
Interest and penalties always accrue no matter what choice you make.
What if I choose short-term and then change it to long-term?
Well, you can always do that because life does happen and you have that flexibility and that right as a taxpayer.
But you still have to pay the setup fees when you make the switch?
Exactly. When you make the switch, you pay the setup fee. But more importantly, penalties and interest are accruing and compounding all the time you're waiting.
Got it. So there's no way around paying interest and penalties apart from
Full pay.
full pay. Let's move on. This is an exciting one for taxpayers who owe. Going back to, you said full pay, offer and compromise or full pay. I'm pretty sure that's an easy answer, but go take it away.
I mean, OIC or offer and compromise all day, but it's not without its cons, right? It's fact specific. Say you owe, I don't know, just $100. It'd be silly to pay a $205 application fee for an offer that is surrounding a tax debt of $100. Typically, those that really can't pay it, there are waivers for that fee, but it's not without strings attached. And some of those strings attached for OIC is 5 years of perfect compliance. That's making your estimated tax payments, correcting your withholdings, filing on time, making sure you pay on time. And that's not October, that's in April.
April 15th or whenever the deadline is for April. We see this happen all the time. Folks who call us maybe year 4 of that 5-year probation that Phil just covered, and they have a massive balance. And quite often they'll ask, can you just go back to them and tell them I made a mistake? You can, but you're going to still owe the full balance. And you're going to have to submit another OIC if you qualify.
Right, and that's back to square one. And who knows, your financial situation may be totally different in year 4 than it was, when you first submit your OIC.
Correct. So if you're earning more income now, you may not qualify. So that potentially substantial savings, maybe hundreds of thousands of dollars, are all right back at you with tax, with penalties and interest, and you can't get out of it again. Right. No more OIC for you. Okay. So going back to the question, offer and compromise or full pay?
Full pay and offer and compromise.
If you qualify. Let's go into the next one. Currently non-collectible as a status or installment agreement. Benefits of both. Which one's better?
I'm going to avoid the words, but it depends. or maybe not. If you have the ability to pay or some ability to pay, installment agreement might be a better fit because it does help you get a discount on the failure to pay penalty. In fact, a 50% discount. So instead of 0.5% a month is 0.25% a month. But if you are truly in financial hardship, don't pay just to mitigate interest. CNC exists for a reason, especially if your disposable income is negative.
Right. So good point there on the failure to pay penalty. I wouldn't even thought of that. But also, what are some of the implications of filing a CNC that may handcuff taxpayers? You should cover that.
One of the most important, again, strings attached for currently not collectible status is the filing of tax liens, specifically the notice of federal tax liens out to the world.
Right. So it's almost like another form of tax probation.
Right.
If you're going to earn money with a CNC status where you don't have to pay the IRS, by the way, anything, they're going to make sure they get paid first before you get paid.
Right. And Phil's note, for CNC, you are subject to review. So they can ask for updated financials, David.
Yep. So if your finances go up, you're in a better situation. They can flag for review, potentially kick you out of CNC.
Yep. And you'll need a new resolution, a new path forward.
Full pay or what?
Installment agreement.
All right, Phil. Thank you for helping all of our taxpayers make the right choice. Now, any last parting words today?
As usual, do something. Sometimes the answer is not always clear what to do. It's just more important to take action.
You're pretty clear today.
Oh, thanks.
That concludes the show today, everyone. Thank you for joining us. See you next time. Hey, everyone. Thank you for watching today. Please remember to like
and subscribe.
And if you are a taxpayer who owes, we encourage you to go to our website, optimataxrelief.com.
And remember, do something.